All right. Good afternoon, everybody. Event Trader here, of course. And we are getting ready for the latest edition of the Options Playbook, which means, of course, we will be welcoming in Brandon Mars right now to discuss the latest and greatest in the markets and talk a little VIX backwardation as Brandon is a man of the people and listens to their requests. So, Brandon, how are you doing today, buddy?
I'm just counting down until I'm liberated tomorrow. How about yourself?
A lot of freedom coming this way, buddy. So I'm just hoping that he liberates us from headline noise, and I will take that as a W, and I'll let the rest play out.
If
Um,
you want to put a friendly wager on that, I would say we will not be rescued from headlines. So,
I am not putting any wager. The president certainly enjoys his time in the spotlight, right? So I feel like every afternoon there's a Trump press conference at all or anything. It's funny because everyone complained about how Biden never did them. And, I'd agree. Obviously, we know why he didn't do them, but now we're getting the exact opposite. I'd like to see what the record is for press conferences held by a president in his first 100 days seating, but I'm going to assume that he would be close to it.
yeah, we just can't. You just can't win these days unless you're the Yankees corking your bats. So, it is what it is, right?
Corking the bats just because we're forward thinking and taking advantage of the rules. The rule says it can't be more than 2.14 inches in diameter, I think, in any part of the bat. It's not doesn't say that it has to be at the bottom end of the bat, right?
I have to admit, like, who didn't think of this? Like, how long have we just had like normal bats and nobody like thought of this or tried it before?
Well, it's an amazing backstory, actually. The guy who did it was a physicist or something along those lines. And when he was like 45 years old, I guess he had probably made enough money and decided to retire and try out in baseball and see if he could make a team. Obviously, he was a little bit past his prime at that point, but he stayed on as a coach because with all the analytics, everybody was so impressed with obviously his mind and his thinking, and that's when they started putting together. I guess they studied Anthony Volpe last year. Did that put it all together where he was hitting the bat and hitting the ball and decided to move the fat part down the bat and lo and behold, it worked. So yeah, it's kind of funny that it's taken 100 years to even think about doing something like this. I guess, right?
Yeah, and in this case, I actually had a bet on Judge to hit a home run that day, so I wasn't super disappointed that they cranked
Yeah,
three of them.
yeah, right. I mean, you should have bet back to back to back to back in the first inning to see if you could have hit that. But that was the most amazing start I've seen to a baseball season. So, or baseball game, I should say. So it's definitely interesting to see how that played out, but we'll see where it goes. I'm sure uh, somewhere along the lines people will be cracking down, but you got to admit baseball loves runs, right? They love the long ball, as that old Tom Glavine and Greg Maddux commercial used to say. So I don't think they're going to be in a rush to eliminate these bats anytime soon.
Unless you're a pitcher that doesn't want Tommy John surgery anytime soon.
Yeah, I feel bad for those guys. I mean, that just seems like it's nothing but Tommy John for all the pitchers these days, given how hard they throw in that spin rate. But I think we're going down a rabbit hole of baseball that people didn't tune in to listen to us for, Brandon. So I'll move us back in. I know I took us down that route, so apologies to the subs. So we'll get back in on the markets right here. So I guess, Brandon, obviously the question is, ending Q1 was a pretty poor Q1. I think it was the worst for the Nasdaq since Q2 of 2022, and we know a big reason for it was the tariff concerns. Certainly, valuations were at play there, and with tariff concerns came the growth concerns and the knock on to the valuation. So, just a bit of a perfect storm for some profit taking going on in the quarter. The question for me for you right now is obviously we got that bounce yesterday in what everybody's expecting to be a bit of a sell off. We've been able to continue to push higher here, albeit very sluggishly, but we did get off the lows pretty nicely. So, what's your kind of take on the market here? Do you see this as more quarter end dynamics at play? Do you think that we've just hit that oversold condition where more people are looking to buy? How are you approaching this market?
Yeah, I do think we probably hit a little bit of that oversold condition, which we'll kind of get into a little bit more during our topic of discussion today. I'm still leaning towards the side that I've been kind of just waiting for this market to roll most of the morning. You said sluggishly. I would agree with you on that one. I just wasn't overly excited. I didn't have a ton of confidence in the bounce this morning. I think we saw a little bit of a roll. I think it was around the GDP update from the Atlanta Fed, if I'm not mistaken on my timing there. Um, but yeah, I mean, obviously we've got the situation coming up where I don't know, maybe we get some certainty, but I have a different take on it this morning after reading multiple headlines that the aides from the administration are still writing up a potential proposal for tomorrow. So, again, it could just be news getting a headline. So I don't want to read too much into it, but there were multiple major media outlets that reported on that. So if that's the case, I don't know. Are we actually getting clarity tomorrow? I guess to TBD.
Yeah. I mean, basically, I got kind of three areas that I'm looking at. Baseline being they announced 20 across the board, but negotiations are ongoing. Best case scenario is they kind of carve out a few areas and have it closer to that 10 to 15% in a lot of areas. And then worst case seems to be if they just throw on 20% and just say we're just going to let this play out for a few months and then we'll see if people want to negotiate. But uh, I agree with you, Brandon. I mean, I have this argument with Carmine a lot. Well, it's not so much an argument as much of a gripe about this whole Section 232, where one person can basically rewrite the entire global economy on a daily whim. Um, it's I guess it's been around for decades the ability to do this, but we haven't seen anybody really kind of abuse that power until now. So at some point I would like to see it, but you need 60 votes in order to get it back in under Congress. So it'll be interesting to see. We got the Senate vote late in the afternoon, which will be symbolic more than anything, just on the Canadian tariffs. So I'm expecting it to go party line, but it'd be interesting if a few GOP members decide to step up and maybe divert from this philosophy of on the tariff front. But yeah, I mean, just what's to stop him from 2 3 days from now throwing out another true social tweet, right? And that's kind of the problem the market has right now. And we're going to talk a lot about that VIX here in a little bit, but it just makes it very difficult to try to put your money anywhere. I did have a one of my cousins. He works over at Sleep Number, and it's a friend of family's time. So if anybody's looking for a bed, let me know. I might be able to hook you up. But I was asking him about the tariffs, and interestingly enough, he said that no issues for Sleep Number, ticker symbol SNBR, if you're curious, because they don't outsource any of their materials. But it's going to be a um, walking pothole of do they or don't they, and where they source it. And I could guarantee a lot of Q1 conference call Q&As are going to be based around that.
Well, I can tell you from a few friends that I have that work at some companies that use a lot of different products from overseas. I mean, there's going to be layoffs, on the way, kind of thing. It's just not going to be a good situation for some of them that I know. I mean, I'm talking about proposals and stuff and things in the works and potential for just everything to get the rug pulled on it. And I have a couple of friends that work at some companies that unfortunately some layoffs are going to be coming here in the next couple of weeks. So yeah, I guess it kind of all depends on we're going to have, like anything in life, we're going to have some winners and losers out of this, right?
Yeah, yeah, and I guess that's the whole point of it. Trying to when you try to reassess the entire global economy, you know that's definitely going to ruffle some feathers, especially since the globalization push for the last 40, 50 years has been underway, and trying to unseat that in a couple of months is going to make for some very uncomfortable times, I would think, for a number of companies. Jobs data too. That's going to be a pretty important backdrop throughout the course of the week. We, of course, had jolts this morning, a little softer. We'll get some ISM service sentiment data out on Thursday, ADP tomorrow, of course, and then the big BLS report on Friday. So, are you following that data a lot closer when you're taking into account your trades, Brandon, these days?
I think you have to, right? Especially with that pesky little stagflation word that pops up every now and then these days. I mean, I think you kind of really have to pay attention to those. The problem is though is stagflation's a pretty clear tug of war. Do we raise rates or do we cut rates? We can't do both. So it's interesting to look at them to try to figure out whether we're gonna tackle growth problems or tackle inflation problems. And I don't know. I think if we were sitting down off the record with the Fed right now, they'd probably just kind of shrug their shoulders.
Yeah, I would get the feeling that they'd be more concerned about growth from the aspect of, we've heard a lot of commentary from them about their view that tariffs could be more transitory, more of an upfront item until things get adjusted in terms of the sourcing supply chain. Just looking at the CME Fed Funds futures from what I was seeing, still looking at about a 63% chance that the market expects them to cut in June. So should be interesting. But like you said, it definitely doesn't make it easy when you got that inflation behind it. But I guess it's not. It wouldn't be demand inflation so much, right, Brandon? It would be more like it would be more just simple cost inflation, which you think would put further pressure on growth dynamics moving forward, is how I see it. But that's just my take. But yeah, thankfully we're not on the Fed because on top of everything else, you're going to have same person who's yelling about tariffs on a daily basis yelling at you about interest rates on a daily basis. So not an envious position to be in.
Yeah, and I would agree with you that they would probably try to tackle any growth issues first. I was reading some commentary in the last couple of days from some Fed members and previous Fed members that if the situation came up, that they generally, I think, lean towards that side of tackling the growth because the theory would be, the slowing growth would kind of help kill the inflation off a little bit on its own. Maybe a little different when it's
Right.
inflicted with some tariffs, but that was kind of how they were leaning. So I'd have to agree with you on your comments.
All right. Well, we'll be keeping an eye out on that. Obviously, watching the markets. Any levels in any of the indices that you're watching a little closer than most here, be it the S&P futures, SPY, Nasdaq, Qs. You got anything pinned up on your charts on a constant basis there?
Kind of looking at the close from Friday on the NQs that kind of like the 1936 area. And then below that, if we kind of break some of those wicks.
On the continuous or
Yeah, sorry, on the continuous. And then kind of like the 18.9 level. Um,
okay.
I have that written on my chart, and I meant to grab this before, but that's kind of an old level. I think it was from like a Fed meeting or something. I have it written on my chart as line in sand. So I remember that being a very important level from before. Sorry that I sound unprepared of not remembering what it is, but that those levels tend to have some historical significance, so they tend to come back into play. So going below the 19 level a little bit and seeing some games, and then if we didn't hold that, then I'd need to search further for my next point lower. So we'll see if we get there.
All right. Well, we'll continue to follow that moving forward. But until then, Brandon, let's take a look. So, obviously, we got earnings season coming up. We'll be talking a lot more about individual stocks, but we just really wanted to do more of a market wide look at today. And one of the big things that we wanted to talk about was the VIX and the fact that it is in backwardation. So we're going to go through backwardation and contango, but long story short, basically, it shows the front end, which of course would be the J contract here. That's the active one, trading higher than the back end contracts, be it the K, the M's, the N, and the Q's. Um, it's a phenomenon that doesn't occur a lot, but there are a few notable aspects when it does happen. So let's break into this VIX backwardation and try to help explain to people what they're looking at and what they should be looking for, and perhaps a strategy or two to take advantage of it.
Yeah, so as you said, backwardation. This was a request from the chat room about a week ago. So again, appreciate any ideas or things that people want to hear about. So yeah, like you said, backwardation, just the current spot price of an asset is higher than the prices trading in the futures market. So in the case of VIX, that could be simplified to as, we're expecting volatility to be higher in the near term and then it will decrease. So this would usually occur around, major events. And as we talked about, I think we have one going on at some point tomorrow. So, yeah, and also like you said, backwardation on the VIX is actually kind of a rare event. So, really thinking about events like the financial crisis in 2008, European debt issues of 2011, and now whatever we're gonna label this
COVID.
little episode, probably tariff something. In a couple of years, we'll label it. But yeah, we're seeing that now. So.
We didn't go to backwardation in 2018, did we?
I believe we did for COVID when that first
For
was.
yeah, in 2020 for COVID, but I don't believe we went into backwardation the last time with the tariffs, right?
Um,
Because I was looking at historical times we'd been in backwardation as well, and like you said, 2008 financial crisis, European debt crisis, 2020 COVID-19 pandemic, but um, I don't believe we went into backwardation last time, so I thought that was kind of interesting.
so actually, in 2018, in January, we did see some backwardation. So one thing that, and I'm glad you brought this up. So, like I said, it's kind of a rare event, and sometimes people look at the different contracts in the future. I did talk to Brett or Chart Trader about this yesterday, who's very savvy with these types of things, as you are as well. And he was saying that he looks at the 3 month out. He actually made a note of that in his comments this morning too. So some of the charts that I saw, Gavin, just didn't always show backwardation because I think they were looking at different time frames. But I did see a brief period at the beginning of 2018 that we entered into it.
Okay, all right. So, obviously, you're talking about some of the things that drives backwardation, and that's an uptick in uneasiness around these tariffs coming up, right? So, um, what are some of the things that, in theory, what's going on in the backdrop there that's driving that in terms of what's the actual mechanics?
I mean, fear is, I guess, the best way I
Right,
can easily
right. But
describe
so
that
so
one.
people are buying VIX and shorting as a short on the ES basically.
Yes, I believe that is the behind the scenes function of it. I'll plead ignorance and apologies if if I am saying that incorrectly. That's probably the most in-depth question I've ever thought about on the VIX, to be totally honest with you. But and you'll get a function of it too, of just kind of like anything like in the options world. I guess is a easy way to think about this is If all of a sudden you have some potential event like the Fed, jobs, tariffs, whatever it is, and people are fearful over that, then you might see a lot of people running out to buy protection. And what's that going to do? That's going to drive up the price of your options in the short term. And then the theory would be you get the event behind us and your volatility would decrease. So, really kind of same thing here, but working in the volatility index and the futures and the S&P, like you said.
Well, I guess one of the interesting aspects for me on the VIX, Brandon, is doesn't always necessarily have to be negative, right? It's more or less people are expecting volatility around the event. For instance, we saw now we never went into backwardation, but we did see a huge spike up in people buying the VIX around the elections. Of course, the elections went off, and we saw a pretty nice rally going from November 6th until around December 17th or so when when the Fed meeting hit, and then the Santa Claus rally kind of got disrupted there. So the other side that we'd be looking at from the VIX would be the put call ratio. And I know we're talking about the VIX here, but the put call ratio really hasn't shown the same signs of fear, right? Do you think that's simply because people have already been unloading their positions and therefore aren't looking for that downside protection? I mean, how would you look at the VIX compared to the S&P put call ratio?
Yeah, I mean, I think that's definitely a part of it, right? You had the VIX that saw that spike, and if I'm not mistaken, I think it got up into like the 30 range, didn't it recently? Off the top of my head. Let's
The
see.
VIX, it might have hit
Almost.
30 at
Almost.
some point last week. I
Yeah,
think it got
so
up to 27 or 28. So highest since August. I know that much.
Yeah, so I think, like you said, in certain cases, you'll have people that will have, made their money in that situation, and another point I'm going to make a little bit later on is, there's signs of a lot of retail buying calls right now too. So, maybe if you've went and bought VIX and you did well off of it, and now you're loading up on calls, maybe you hold on to some of those contracts as a small hedge, but you know, if you're going and buying a bunch of calls, in theory, you're going to be taking off some of those hedges too. So I think that's probably played a small role in it too. And I would also guess too that with the big quad witching that we just had, that some of the different hedges that existed out there, came off.
Do you ever do anything in the calls or puts for VIX options?
I haven't touched a VIX option in quite some time. Maybe a little
Is there any particular
PTSD.
reason?
Yeah, maybe a little PTSD as a young trader where I was just learning options and I was like, well, if, a call option will go 10x if I hit a breakout and this extra volatile derivatives instrument gets really moving, then maybe I can get a 20x. And I probably just didn't trade the thing right as a young trader, and I haven't revisited it. Mainly just because I don't know, I just enjoy trading Nvidia options more than the VIX, and it's just a little bit of a function of I've picked my lanes as a trader, and I try to not stray.
Yeah. No, and that makes sense. But if you were, what are some of the theories that you would have for trading these options?
Yeah, so couple ideas here based upon the current environment in the VIX. So, in theory, with the price of short-term options being driven up in price, we could sell options to collect higher premiums. And I'm just going to throw a huge asterisk on that idea. So, in theory, again, when options premiums are high, you would maybe lean towards selling them to collect that premium. But there's just a lot of potential market moving headlines coming up the rest of the week. And, some people, talk about selling options as, picking up pennies on the track until the train runs you over. So I just kind of asked yourself in that situation, if I get caught on the wrong side of the table, was it worth collecting a few bucks by selling VIX options? That's just kind of my take on selling them right now with everything going on. Um, the other scenario is, in theory, we could buy VIX puts, and that would be based upon the assumption that the spot price drifts back to the futures price, and then that would again move it back into contango, the normal curve that we would expect. So in this particular case, I think there was when I looked last night, there was about a 2 point difference between the spot price and 3 months out. That's probably changed, but again, when I last looked, so if you were going out and you were buying put options, you're talking about how the VIX would need to kind of move a couple points to come back into contango. You also need to keep in mind with, the premiums that you're going to be paying, that you need to cover those on the movement. So I guess kind of my thought, and I think Chart Trader had this one a little bit too, is you might want to just consider using the straight futures contracts versus the options in this particular case. Yeah, again, I used to work with a futures hedge fund. I have a background on them. I've never really traded them myself. I'm not an expert on them by any means, but if I were to try to, pick up a trade on that, I'd probably look at the straight futures just personally. And for me, with all these headlines, I personally just don't want to be buying VIX puts. I'm not knocking it if you're doing it. It's just not how I'm personally thinking at the moment.
All right. Some other things that I would just throw out to people too is there is a lot of ETFs out there that track this as well. You got the iPath Series B S&P 500 VIX short-term futures ETN. That's VXX. That tracks the S&P 500 VIX short-term futures, maintaining long positions in first and second month VIX future contracts. You got the VIXI out there. That's the ProShares VIX short-term futures. Basically seeks to provide exposure to the S&P 500 VIX short-term future index, as Brandon was just talking about. You also have the UVIX, UVIX. That's the two-time long VIX futures ETF, and then you also got some short ones out there too, Brandon. Right? You got the SVXY, which is the ProShares short VIX short-term futures, which targets daily investment results at about one half the inverse. And you also have Simplify Volatility Premium ETF, which is the SVOL ETF. So there are a few different ways of playing that if you didn't want to get involved with the futures or buying options, right, Brandon?
Boy, I have to admit, I didn't realize that there were that many of those ETFs left. I thought a couple of those went to the graveyard after the last market blow up.
Yeah, no, they're still sticking around here. I think the SVXY is another short term. I mentioned that one. So, but yeah, I mean, just kind of different ways to play it there if you want to play along in there. I'll jump in on the UVXY and the SVXY on the occasion, just if I'm expecting something to move and didn't want to have that leverage exposure like you would in the futures or options. So. Um, Basically, Brandon, then, we talked about the options, talked about the futures, some of these ETFs here. What are some of the things that you'd be looking for as potential play around the tariffs then, if you were to get involved with the VIX?
Yeah, I mean, again, I guess you got to kind of take the step back and what's your own personal positioning, right? And thoughts. If you think, hey, we're getting all the clarity tomorrow, and we are going to revert back to contango, then I'd probably keep it simple, and I'd probably either be a buyer of puts and calls. Just that way you're not writing any sort of naked option on the VIX on a potential volatile time. you know what your risk is going into it, right? If a contract's a buck, you know, like you know what your losses are going to be limited to, and that way, if you're totally wrong and it moves in the total opposite direction, you have a very defined risk going into it. So, I personally think that there are more things on the way, and um, I'll actually point out another point in my notes here along those lines that so I actually saw an article with a chart from Barclays that was showing that expected volatility on April 2nd was actually lower than April 4th, which I was very surprised by personally. And basically, according to Barclays in their studies, they were basically stating with that people have more fear around the jobs report than Liberation Day. So, for me, again, we got to see how
Right.
this all kind of
Right.
continues to unfold. But, I think if we have this continued headline minefield, we're going to have some reactions from different countries. We got to kind of digest what we put out there. So it's doing anything as far as a volatility trade. I'm just personally of the mind frame that I think volatility is going to continue. I see I see the path of least resistance myself to the downside at the moment. So personally, I wouldn't be going and buying a VIX put. I just wouldn't. But if I were to play it, I would just do a straight call. I would kind of ignore the backwardation, if I'm being honest with you, with the assumption that if I'm right, then the market's going to get smoked on all these headlines and the VIX is going to spike. And even if we're in backwardation, I'm still going to, get a payout on my VIX option. Or if you just want to just keep it simple, there's plenty of lovely options available to buy in the QQQ or the SPY in both directions. So,
Yeah. Yeah. Or you could just keep it simple and just buy Newsmax, I suppose, right, Brandon? As that rockets above $200 at the moment.
yeah,
We
I
are
put
seeing
my whole
futures
401k
breaking.
into it this morning, so I'm
There you go.
rich.
There you go. There you go. So we are seeing futures breaking down here as it slips below the 5660 area down to 5643. Now a good 50 points off the high. So certainly seeing some of that money that was squeezing us higher over the last day and a half start to fill out here. We are in negative territory for the S&P, down just about 9 points or 0.16%. So that is definitely starting to take hold here. Nasdaq, it is still in positive territory, but that is coming right down to its break even around that 14 or 19,450 area here. Trading up just slightly 8 points. Then Russell is keeping an eye out on that price action. We've got that also dip into afternoon lows. This is down about 0.5%. So some people are getting a little cautious coming in, following that nice run up, taking advantage, just selling here into the announcement tomorrow, which is expected again at 4 o'clock p.m. in the Rose Garden. So we'll be watching this closely. But Brandon, what else on the VIX do we need to know before we let you get going here?
Yeah, just one more point from earlier in my notes that I skipped right over. So when the VIX has gone into backwardation, it has generally speaking been a pretty good buying opportunity. Again, Chart Trader put kind of the same note in his morning comments. If you kind of go and look historically speaking, it's usually been a pretty good time to buy equities. I guess again, I would throw a little bit of an asterisk on there where, the day that something goes into backwardation, there's usually obviously some volatility and some fear out there. So, not necessarily always the smoothest ride. Technically, we're in backwardation right now, and you still have all of the tariff stuff tomorrow, and you've got all the remaining economic data for the week. So, again, if I were a gambling man and you were to go and buy some shares of Nvidia that, you might want to maybe anticipate a red candle or two here or there, kind of out of all of this. And then I guess one last point I would make is, again, I've been kind of reading a bunch of these articles about positioning by different traders for tomorrow. And One of them discussed how retail, again, as I mentioned, had been buying the dip while also buying calls. So, kind of an interesting dynamic that there's some fresh longs in there that are quite a bit of retail mixed into it, which, again, if things go the wrong way, that could add some fuel to the fire. And, this article said they're either, and this is a quote, they're either about to be proven spectacularly right or spectacularly wrong. And for me, as we talk about, options on a derivative based tool that we have out there with all these different things, I personally wouldn't want to be on the spectacularly wrong side of a high risk VIX trade in this environment. So, luckily, these subscribers in briefing are all quite savvy, especially when it comes to options. But I will just sleep a little better at night if I give that warning on know your risk accordingly for the rest of the week.
Yeah, yeah. Well, I'll definitely be something to keep an eye out on. It's going to be an interesting 48 hours or so, I would say, Brandon, right?
There's going to be a lot of Pinot Noir, Gavin. A lot of Pinot.
All right, Brandon. Well, anything else before we let you get going over here?
No, I'm sure everybody's brain hurts just like mine talking about something like the VIX. So I think we'll let everybody get back to it.
All right. Well, thank you very much for stepping in and helping explain that to us. Much appreciated. Helps give an understanding and backdrop to what we're looking at there and a lot of things that what we're discussing, of course, as well. So, Brandon, with that, we'll let you get back to your normal trading job over there. Appreciate you coming on and explaining that all to us and look forward to talking to you next week.
All right. Thanks, Gavin. Take care.
All right. Talk